JP Morgan just dropped an absolute bombshell. Bitcoin to $170,000 in the next 6 to 12 months. From skeptics to Bitcoin bulls, the shift is huge and you won't believe the details. So in today's video, let's dig into this recent analysis from JP Morgan, one of the world's largest banks, to see what juicy nuggets or larger takeaways we can extract from it and figure out what it all means for the bigger question of the 4-year cycle versus the extended cycle question, because they're arguing for an extended cycle. We will have new highs next year. So here's the analysis from JP Morgan as reported on November 6th. Quote, Bitcoin could rise to around $170,000 in the next 6 to 12 months as leverage resets and its relative volatility versus gold improves. The analysts noted that this latest 20% correction for Bitcoin was a result of a massive deleveraging event, but that all signs indicate that this deleveraging is over because the ratio of open interest in perpetual swaps is back to its historical norm. So that's JP Morgan's take on what caused the latest correction, why the correction is probably over. Essentially, open interest for perpetual swaps for Bitcoin has reset. We were at above average levels. The latest washout has brought us back to the normal range. Now we see ETF buyers step up and start changing the flows back. Here's the reasoning for a $170,000 Bitcoin price tag in the next 6 to 12 months. So they say the recent rise in gold volatility has made Bitcoin more attractive to investors on a risk-adjusted basis. In that sense, the Bitcoin to gold volatility ratio has dropped to 1.8. Then Bitcoin would need to rise to $170,000 in order to match gold's total private sector investment market cap on a risk-adjusted basis. What's JP Morgan saying here? Essentially, they're saying that the big institutions and portfolio managers like to invest in both gold and in Bitcoin, but they balance their portfolios between the two to account for the risk and volatility for each of the assets. However, since gold's volatility has been going up recently, which you can see here, well, Bitcoin's volatility, well, it's been doing the opposite. It's been going down recently. It's been falling, which is shown here. Then that actually gives these institutions and the portfolio managers the green light to allocate more money to Bitcoin in order to bring their overall risk balance between the two assets back into better alignment. That makes sense. I can dig that. But then the next question is, how did JP Morgan arrive at a $170,000 price tag? Very interesting. We'll get to that in just a second. Before we do that, guys, if you're trading Bitcoin, you're trading Ethereum, trading Solana, you need a good exchange to do that at. BitUnix, where I'm doing a lot of my trading these days. You can join me to be able to anyone, anywhere. That's you. And they have an insane, really crazy bonus going on right now. Wild deposit bonuses, like you put in $2,000, you get $400 back. But they also have huge whale bonuses as well. We're talking 10,000 gets 1,000. 20,000 gets 2,000, 50,000 gets 5,000 back, and if you put in 100,000 effing dollars, you're going to get 10K cash back. These are wild, wild deals. It's extremely limited time offer. So if you want a long rip, short the dip, the only question you have to ask yourself is, will you move over to an exchange that is going to support you and give you insane bonuses just for trying out the exchange? Link down below. Go check it out. Thank you very much. Okay, so $170,000. How did JP Morgan come up with this? Well, basically, since gold's current market cap solely from investment allocators is around 6.2 trillion, not the total asset class, but the 6.2 trillion from investment allocators, Bitcoin's volatility compared to gold is 1.8x. Then the way that JP Morgan determines Bitcoin's fair market cap from a risk-adjusted portfolio perspective will be by dividing gold's investment market cap by Bitcoin's volatility compared to gold. When you do that, you get a Bitcoin market cap of 3.44 trillion or $170,000 per BTC. Therefore, to sum up this entire thing, JP Morgan is essentially giving us a theoretical model which suggests a $170,000 Bitcoin price just makes sense. Its big players continue to see Bitcoin as digital gold, which they increasingly are. People like BlackRock's Larry Fink are out here beating that drum every day. The $170,000 price per coin would close the gap between Bitcoin and gold when adjusting for volatility risks of both. And I know that's a little bit technical, but I think you've got the main idea. Now, what are my thoughts on all this? Look, JP Morgan, big company, they got a lot of smart analysts. First, I think we should acknowledge, though, that bit of skepticism. The idea that JP Morgan is putting out this kind of price and prediction model as a way of generating some kind of X liquidity. You can't trust JP Morgan as far as you can throw them, and they're a pretty big organization, so you can't really throw them. So don't trust them. Maybe they're just looking to unload their bags. They want some retail exit liquidity here. Okay, I'm not one for trusting JP Morgan, so we need to recognize this possibility. Now, having said that, I do think we should think carefully about what JP Morgan is actually saying here and if it makes sense beyond just not trusting JP Morgan. And that's because they've been singing this tune for a while now, and they got an earlier Bitcoin to gold price prediction correct. So check this report out. In August, the block reported that JP Morgan was stating that Bitcoin had hit $126,000 by the end of the year. Well, that happened. Why were they saying that? For the same reasons we just discussed. The bank thought Bitcoin's price compared to gold was too low on a risk-adjusted basis. Now keep in mind that Bitcoin's price, when this report came out on August 28th, was $112,000, where gold was at $3,400, still within its major multi-month consolidation range. Meaning, if we just fast forward the clock 39 freaking days, then of course we know that JP Morgan nailed this particular prediction, as Bitcoin did indeed hit $126,000 on October 6th. Now, that's very interesting. The bank was running in August the same exact Bitcoin to gold analysis that we just discussed. Their model gave them a $126,000 price projection. They published it. Bitcoin hit that price 39 days later. However, if you've been paying attention to the price of gold, you'll know that from the time that Bitcoin went from $112,000 to $126,000, gold broke out of its consolidation range and went from $3,400 to well over $4,000. That move prompted JP Morgan on October 2nd, 4 days before Bitcoin hit $126,000, to revise their Bitcoin to gold risk-adjusted price projection to an end-of-year target of $165,000. And just for clarity, when that October 2nd report was issued, Bitcoin was trading at $118,000, with gold close to $3,900. So again, the takeaway here is that JP Morgan has been running this Bitcoin to gold risk analysis for a few months now with some pretty interesting results. It led them to getting that $126,000 call correct. Let's see how we see moving forward. Since that time, gold went up to a new all-time high of $4,350. That's why JP Morgan is now forecasting Bitcoin to go up to $170,000. My third point is this. If JP Morgan is correct, and Bitcoin indeed goes to $170,000 in the next 6 to 12 months, then that will put our 4-year versus extended cycle question to bed well and truly forever. Because obviously a new all-time high for Bitcoin between May to November 2026 would very clearly break the 4-year cycle. In fact, anything probably even Q1 puts the cycle into extreme question. And that would place us squarely in a new extended cycle. That's just something interesting to consider. And if you want deeper breakdowns on crypto, stocks, charts, trades, and much, much more, you should check out our free newsletter. There's a link right down below here. It's free. It's awesome. Go check it out. Seriously. So if you assume that JP Morgan is sincere with this prediction, and there's a lot of analysts working at JP Morgan, it's easy to throw JP Morgan under the bus. We often do, but it's a big organization with lots of analysts that have different views on things. So anyway, if you can see this prediction as sincere and you think they're maths, then you've got to recognize the bank's analysts are basically extended cycle theorists at this point. I dig it. Thanks for watching.